Hi guys, so this video is about how to mark up a chart for beginners friendly and like the basic way of how we analyze a chart, and this can be used in any financial market, which is stocks, forex, crypto, um indices, synthetic indices as well. So this can actually be used. These are the basic way of marking up a chart. So what I do in marking up my charts, first of all, I'll introduce the trend line, zones, which are support and resistance. Then we can use candlesticks. Then there are different kind of patterns you can use as well, but this is just a simple way on how to mark up the charts that I use. So now let's say that I'm going to use this right here. So first of all, let's see the direction. Let's look for the direction. When you look at the chart, this is a pure chart that nothing has been drawn on. What are we looking at? We are looking at a possible uptrend, because we can say it's going up, coming down, going up, coming down, going up, right? So this is a possible uptrend right here that we can see. And because this will be a beginner friendly markup chart, let me just do a quick explanation on trends, right? Let's talk about trends. So when we talk about trends in the financial market, there are three types, right? Even if it's two types, we have the uptrend, we have the downtrend, and we have the consolidation. That is not a trend, but it's still part of how it goes, right? Those are the things that make up a complete chart, that makes up a complete chart slash direction. So that will determine what we are looking for when we are marking up charts. So let's now talk about, since now we're talking about trends, let me explain. Let's talk about so now let's go to uptrend. So uptrend is an impulse, a correction, and a continuation. So this is called an impulse, this is called a correction, and this is a continuation. This is for an uptrend, right? So for a downtrend, the impulse comes from up, something like this and like this, right? So this is the impulse here, this is the correction here, and this is the continuation here. And it doesn't have to be like this, right? Sometimes an uptrend can also be an impulse, then the correction is more of a sideways before we now continue to push to the upside, and downtrend is an impulse, a correction, then continue to push to the downside like this. So this is how like trends have, right? So if you can't see it with your bare eyes, sometimes majority of the time I think you should be able to know, oh, it's going uptrend or downtrend, right? Depending on that. But this is more of a beginner friendly for those that don't really know about trading or how the chart looks. So that is why I'm just explaining more in a basic way, right? For people that don't understand that. So like I said, this looks like, just barely looking at it, we know this is an uptrend. Now I can take my trend line. For a trend line to work, right, a trend line, you need to draw a trend line. To draw a trend line, you need two or more points. To draw a trend line, you need two or more points. I'm going to explain what I'm talking about on that. I can say this is 1 point and that is another point right here. Okay, let's see. So this is a point, point A, and this is point B. So you need two or more points to be able to draw a trend line. A trend line is wrong if you just put a trend line right here. Let's just put an example on something not to do, right? Not to do, you can't just put a trend line here. This is wrong. It has to be two or more points to be able to draw a trend line. You can't just draw a trend line based on one point. So this is a point here, this is a point here, this is a point here, this is a point here. So now you have multiple points and you can draw a trend line to connect them, just to simplify when you mark up your chart, right? So now let's go back to 1 point to 1 point here. Okay, wait, let me use an arrow just to make it a little bit easy. So the arrow shows we are going to the upside right here. Let's see. Okay. So the arrow shows we are going to the upside right here. So this is the correct way to draw a trend line, because it has two touches. So one touch here and second touch here. This trend line is valid. This trend line is valid. So this trend line is valid right here because we have two touches, which is good. So that is how I start to mark up my trend line, right? You can use trend line to mark up, right? And now let's see what we can look for again. I can also draw a trend line here because I can see that we can have two touches here too. Perfect. So this is a valid trend line, and you can see based on this trend line right here, it's giving us an uptrend. So overall we are at uptrend based on this trend line right here. We can see that uptrend, right? So that is one way to mark up your chart. So what next and how I mark up my charts, right? I can also put a trend line right here. So you can put a trend line anywhere in the market as long as it has two touches. So this is one touch here, this is another touch here. This is a valid trend line because of that. So now there is this controversy with trend line. Some people like to put their trend line at the body of the candlesticks. I don't like doing it. I like starting from the wick. So some people like maybe something like this at where the body starts instead of the wick. This is called a wick. Okay, let me, since I'm doing it for more of like a basic let's say candlestick. So let's see how candlestick works, right? This is a wick of a candlestick, and this is a body of a candlestick. This is a wick as well. So now how do we know which candlestick is an uptrend? Because you don't have to, I know some beginner like to use just black, just green, or when it's up it's when it's green it's up, when it's red it's down. It can be any color, to be honest. So it just depends on how the candlestick closes or how the candlestick reacts before you know whether it's an uptrend or a downtrend at that moment. So now let's see how that is. So we can see right here, this is a valid trend line, right? Apart from no, because I don't like putting my candlestick at the body. I'll correct this back. I prefer putting my candlestick at the wick. So at the tip of the wick, tip of the candlestick wick. So I like putting my trend line at the wick of the candlestick wick, but like I said, some people like at the body. I think as time, this is a beginner friendly video. Just try to like put that out there. You can do whatever you want and how you analyze a chart. That is fine, but this is a beginner trend, and just start from somewhere. Then as time goes on, you look for what makes sense to you, right? So now let's look at support and resistance. Support and resistance. So what is support and resistance, right? So support and resistance is like a zone you draw that is a little bit sensitive or has been touched multiple times on the chart. So we call that support and resistance. So I know some people, when you first start, some people doesn't really understand what that support and resistance is. So to simplify that, when I was trying to understand support and resistance, I knew support was the floor, resistance is the ceiling. So now let me explain what that means, right? If I draw a zone right here, so to draw this zone, I'm using this box right here, this rectangle box to draw the zone. Let's see, I want it to extend left and that, let's see, the long one. Okay, now let's see one here. You can also put another one right around here. This right here is the support zone. This is the resistance zone. You can see this is the ceiling and this is the floor, because the support zone is below the resistance zone. So that is how I was able to, like, when I first started, able to differentiate, oh, which one is the support, which one is the resistance. Resistance is ceiling, support is the floor. So that is how you know. So how to draw a support and a resistance, right? You just don't draw a support and resistance at any level, right? At least for me, I like to look for levels that there were multiple rejections around that levels, right? I mean multiple, not just one rejections, multiple rejections. Then that can stand as a zone that is sensitive, because we've, based on the prior price action, we have noticed that whenever we get to that certain zone, there is always a reaction. So there's a possibility that when we get to that zone, there is still a reaction. That is support and resistance. So now let's see my reason for drawing a resistance and support at that specific zone. So now let me explain. Let me explain what I mean by whenever we get to a certain zone, there are multiple rejections, right? First, like I said, this is our support, right? This is our resistance right here. And this is my support right here. So first of all, let's check on the support, right? Why do I make this my support? And my reason is because looking at the left right now, we can see, if I go to around this area right here, this is using it here, right here. This is actually 2010. This is around this level right here is 2010. We can see this zone right, this level, this particular one right here is Monday 25th October 2010. That is crazy. 2010. I don't even know about trading by then. So you can see around that area right here, this section right here, we started rejecting off of that section. We can see when we first come up to this section, there was a reaction here. Then it dropped, we went back again, another reaction. It dropped, we went back again, another reaction. So this, around just this area right here, we have 3 reactions around that area. So that solidified that zone because we have 3 reactions that, okay, whenever we get to that zone, there is always a reaction. So there's a possibility that there may be a reaction when we get to that zone. So first of all, that is a strong zone, a strong zone. Now let's look forward and see more, right? Coming to this level right here, we are still at the same zone. When we got to this zone right here, what did we do? We rejected. We broke this zone. When we came back to push to the upside around the zone, what happened? We rejected. We went back again to that zone. What happened? There was a rejection. So this about 2 rejections on that same zone, on the same zone. So it makes that zone solid, that whenever we break that zone, there is a possibility, whenever we break that zone, there's a possibility that we might continue because the zone has been tested in the previous price action. That is a strong zone. But if we break the zone, if the body break the zone, there is a possibility that we might continue to move because the zone had tested that it's hard for it to break. But if we break that zone, then there's an higher chance that it won't go up again. It will start continuing to the downside according to this direction, because this one we are currently on a downtrend, right? So we can see that this first candlestick was pushing down to break the zone. We saw this weak rejection. It didn't break the zone really well. Then this candlestick right here broke the zone, right? After breaking the zone, the body of the bearish, which is the down, right, of the bearish candlestick, closed below the zone. So this candle right here closed below the zone. So those are like confluences that there is a possibility that we might now continue to push to the downside, because based on the parallel price, we can see that is a really strong zone that it takes a while for it to break. And now that it breaks and the candlesticks below the zone, there is an higher chance that we might continue to push to the downside. So just to show that this is a down move as well, like I said, all you need for a trend line is 2 or more points, and you can draw trend line as much as you like based on your preference. It's showing me a downtrend. I can also still draw another trend line right here from 1 point to this point right here. You see, I can still draw more trend line from 1 point to this point right here. So it's showing me right now we are on a downtrend, and you can see my arrow is showing a down arrow. So that is my second reason why I chose that zone as a support zone, right? Let's still continue to push to the other side. We can see even around this zone too, when there was this break of zone right here, we came to retest that zone as well. Then we continue to push to the upside, right? So that is a significant of how you draw your zone. It has to have tested multiple times for you to know that is a solid zone. So you can't just draw your zone anywhere. I hope that is not confusing. So now, why did I draw my resistance zone right around this area? Let me explain. It's just as simple as the previous one I explained to you previously. We can see here, we got to this zone right here. Let's see. We can see that around this zone, whenever we get to this zone, there's always a reaction. Let's say this is our first zone ever right here, right? What happened? There was this break of structure here with this engulfing candle. Then it came up to that zone to retest. It didn't break out of that zone. It retested that zone and continued to push to the downside. So it shows the zone is solid. Now, after then, that was when, let's look at the date of that. That was also around August 2020. You can see August 2020. So now let's push a little bit to the left, to the right, I mean, because we are around the zone again. What happened around that zone within this period? March 2022. So that is a solid zone that whenever we get to that zone, there's a possibility that we might start rejecting off of that zone based on the prior price action. Now let's go back to this third line right here. What happened when we got to that zone right around this area right here too? Which this was 2023 right here. So this particular one is 2023. We got to, there was one reaction around here, April 2023. There is another one right here, May 2023. So as you can see, one here, right? So it just shows how solidified the zone is. So even when we got to that zone at around that April 2023, I knew there's a possibility that we might start pushing to the downside. And that was part of the reason why my confluence is that, because around this area right here, there was a rejection. So there's a higher possibility that they might reject around this area. Does it always have to stand? No, it doesn't always have to stand. Because of her prior price action, there was a reaction around that area. Doesn't mean it cannot break. It can break, but is there a possibility that it might push to the downside? Yes, because of the way it has reacted previously. But before we can take a buy around this zone right here, we have to make sure that this zone is broken with an engulfing candle, and the bullish candlestick closes above the zone. So if a bullish candle closes above the zone right here, right, that is one confluence that I think now the resistance now has been broken, because there was a bullish candlestick that closes above that zone. But that does not mean we have to take our trade yet, because that might be a fake out. Because remember that previously the zone is solid, because of whenever we get there, there's always a rejection. So closing up of that around that zone, meaning that it might be a fake out or it might be an actual breakout. But to confirm that is an actual breakout, right, according to me, I want it to at least come back to retest that zone. And if I still see weak rejection around that zone, then that shows me a possibility that we are trying to continue to push to the downside, but it's rejecting off going to the downside. So now we can now confirm that now I think it's going to continue to push to the upside, because it has the candlestick has closed below the zone, and we retested that zone multiple times by seeing weak rejections, and we noticed that the seller is weak, meaning it's not closing above, it's not closing it's not closing below the zone to now continue to push to the downside. So that's a confluence to give me that I will now make sure that this is not a fake out, but a breakout. So that is why when you're trading, you have to be patient to know how it goes, because sometimes it can actually break that zone and you think, oh, finally it has broken the zone, we are pushing to the to buy, but unfortunately it was just a fake out and it will continue to just push to the downside. So that is why confluences are really necessary when trading. So now we can see that when it comes to this zone right here, right, it came to this zone right here, it's rejected multiple times right here. As soon as I saw this pattern right here, this M pattern right here, M pattern, which is a reversal pattern, I knew we were going to push to the downside on gold. I knew we are going to push to the downside on gold. I knew that. And even for some people that are not really familiar with that, you can actually wait for it to start breaking the zone for you to be more comfortable taking the trade, right? And let's start reacting to give us different. We can see I'm drawing more trend lines. So that is how you just chart up your zone, just to make it more easier for you, right? You can see right here, it's now giving me a lower high, a lower low, a lower. Let me change the. So we can see a lower high, a lower low, a lower low, a lower low, a lower low, a lower high, a lower high. Now the direction has changed. Direction has changed. Has changed to bearish, because this was the direction as first, which is bullish, right, and uptrend, and now it has now changed to sell. So that is how you chart up your charts to just make it a little bit more convenient for you, right? So now let's go to a little bit more advanced right now, right? So now we can see, now let's continue with the support and resistance and trend line. Now you see I've now simplified this particular chart right here by drawing this trend line right here, showing there is this break of structure coming here, and now it's now giving us a lower low, a lower high, which is a downtrend, right? That is how downtrend is. So now what next can we do? We can have multiples trend lines, we can have multiple support and resistance. So now I can have a mini support and resistance right here. You can have one here. So now why do I have a support and resistance here? You can see a rejection around this area, a rejection around this area, a rejection around this area, a rejection around this area. So we have multiples rejection, multiples rejection. So that solidifies that zone right there. That solidifies the zone right around that area, as we can see. We can have another zone right here too. So I'm just giving you like a basic of how to draw a support and resistance, so that it will not be, but you don't have to draw a lot, just make your chart as clean as possible. But I'm just giving you more instance on how you can draw a support and resistance. I see rejection here, right? Whenever it comes a rejection, it broke this trend, it broke the zone, came back to reject around this area. Rejection here, rejection here, rejection here, multiples rejection. You caused a good zone to draw a support or a resistance on. So that's why you can't just draw zone on anywhere. You have to look for a certain zone that is solidified, and that is how you find a certain zone that is solidified, meaning there are multiples rejections around that zone. It makes that zone strong, and that is how you can place a support and a resistance on that zone. So you can actually just trade with support and resistance, because some people do. So we don't have to make analyzing trade difficult. It can be as simple as just support and resistance and trend line and chart. I use chart pattern as well, and possible and candlestick patterns. That's it. Just look for how it is. So let's see an example right here, right now, right? We can see the sell. This was a good zone right here. We have been seeing rejections around this zone right here. Then this particular zone, this particular trend closes, right? We saw this candlestick. Let me zoom it out a little bit. We saw this candlestick closes below the zone. So the body stick closes below the zone. First, when it closes below the stone, the first thing I will think of is because there have been a multiple rejections around this zone, which make it strong. And now that there's this sell candlestick closes below this zone, it's showing me that the sell momentum is high, and there's a possibility that we're going to continue to push to the downside. That is my first confluence. Now my second confluence is I need a retest. We've come up to that zone and we are trying to break that zone multiple times. Let me zoom in a little bit. we can see that we come up to that zone and we are trying to break the zone multiple times, but it was rejecting. Meaning the buys are not strong enough to break that zone and continue to push to the upside. So that's a second confluence that there's a possibility that we might continue to push to the downside. Now, let's see my third confluence that will make me take this trade now. Is after this multiple rejections around this area, we saw this beautiful candlestick right here, closes and engulf this previous candlestick. So this candlestick right here engulfed, let's zoom in a little bit. This candlestick right here engulfed this candlestick, which means it's more bigger than the other candlestick. That is a good entry right there. If you enter the trade, let's assume, because this is a daily time frame, as I don't recommend people to enter from daily time frame. So, but if you enter a trade from here to here, this is 6,283 pips right there, which is crazy. That is a lot. So those are like the confluences we can now start using to take trades, right? So it's not just support and resistance. I use support and resistance, but the more confluences you had in trade, the higher the possibility is that it might go on your it might go it might go in your favor. So now let's say I use chart pattern and I use candlestick. Let's now go to Google and look for candlestick and chart pattern to explain a little bit about how you can actually add that to your marking up your charts, right? So now let me explain just a basic of chart pattern, because you can also use that to analyze your chart and mark up your chart, right? Which was, you can watch my previous video on I use on how to use TradingView. You can see where I said, let me just do a quick recap. Let's go back to, you can see right here, you can now see where this around here right here will show you the drawings, can show you how you can use some of it, like head and shoulders. I know there is head and shoulders. Yeah, let's scroll and see. Okay, now you see, so when you click on your drawings, you can see patterns right here. So where is your drawing? Your drawing is right here. Let me close and put it back so you guys, for someone new that doesn't really know much about TradingView, you can see this right here. This, let me put this right here is the drawing. You click on the drawing right here, then you scroll down for patterns. You scroll down from the drawing, and this is your pattern. You can see pattern. Now you can use different patterns based on that you see, but there is this is one of the ones that I use, head and shoulders, but a lot of people use different one, but this is the only head and shoulders that I use as a chart pattern just to show it. But most of the time I just use the W and M patterns to analyze this. Once in a while I see head and shoulder. So, but let me just go there and see for those that are new. So now let's see. So this is called the W pattern. Right here is called the M pattern. I mean, this is the where is the W pattern? This is the W pattern right here. So the double top is just basically something like this, giving us a double top, and it can also become the M. So these are patterns. So they are reversal patterns and they are continuation patterns. I don't literally use the bilateral patterns. I just use the reversal patterns and the continuation patterns, right? So reversal patterns is just any patterns that shows that, let's say we are currently on a bearish move. We're currently on a bearish move. So this is uptrend, right? Reversal meaning, what is the reverse of up? Downtrend, meaning okay, it's going to show us a pattern to now know that we are now going to the downside. So basically that's a reversal pattern. A continuation pattern is just okay, now it's giving me an uptrend, it's falling down, right? Now it's giving me a pattern that it's going to continue because our initial trend is an uptrend and it's going to continue to an uptrend. So this is called the continuation pattern and this is the reversal pattern. So that is just how it is, but there are different types, right? So now but this is the most common one, but the most common one I use is M pattern, W pattern, falling wedge, and some people call this descending pattern. So descending pattern, and some people call this ascending pattern as well. So yep, these are what majority of what I use most of the time. Once in a while I see head and shoulder, but it's good to know depending on the pair you trade. The pair I trade most of the time is just giving me W and M pattern. Y falling wedge sometimes, which is also called a descending pattern. But like I said, it all depends on the pattern you use, on the instrument you're analyzing, right? And if you backtest, you know, oh, most of the time I see this kind of pattern most of the time. So that is why you have to backtest, right? So now this is a reversal pattern, like I said. So a reversal pattern is giving us the M pattern. This is the M pattern, right? Meaning when we are pushing to the upside of a zone, we want to see something like this. It doesn't have to be a smooth M pattern, right? This looks smooth. Sometimes it's giving us something like this. Come down here, just come up a little bit, and we can still see this as a M pattern as well. So it doesn't have to be equal or parallel. No, sometimes it's not. So sometimes we can see it like this. Come here, push up a little bit, and continue to push the outside. You can still call this the M pattern as well. So sometimes it's not just as the book, which is making like an M pattern parallel. It's not always like that. You just have to train your eyes to understand it. So now let's look at the double bottom, which is also called the W, right? So the W can be parallel. Sometimes it can be something like this. It's still called a W pattern. Sometimes it can be something like this. It's still called a W pattern. So it doesn't have to be accurate. So that is also, so this kind of pattern you look like to say, oh, I think we are going to reverse, right? Now let's see. Let's look at the head and shoulder right here. So the head and shoulder, it's something like we have a pattern here. Come here, come here, come here, come here, come here. So this is an head and shoulder. So this head and shoulder is, this is the left shoulder, the right shoulder, and the head. So that is why it's called head and shoulder, right? You know our head, we have our shoulder, we have a left shoulder, we have the right shoulder, and the head is at the middle. If you look at like the human being structure, that's funny, but that is how you call head and shoulder. And we have something called the inverse head and shoulder, which is the same but just opposite on the downside. This is the left shoulder, this is the head, and this is the right shoulder. Right there. So we can also say this is the rising wedge and falling wedge. I'm just going to explain that. I'm going to do another video on that, but let's just say we can say the rising wedge is something like we have an impulse right here, then maybe around a certain zone it's giving us a reaction of like something like this. Then this is called a rising wedge. Some people call it, like I said, and some people call it an ascending pattern. I know there's an ascending pattern right here, but I'm not used to that. I'm just used to this. So some people call it an ascending pattern. So if it's reacting right around this zone and I see something like this, then there's a possibility that we might start continuing to drop. So now this is falling wedge. Falling wedge is maybe we are around this zone right here. I see an impulse right here and it's coming around the zone and it's giving me something of this pattern right here. Then there's a possibility we might reject and push. So this can also be called a descending triangle. Oh, sorry, a descending pattern. Yeah, it's also called triangle, but a pattern right there. So that is another way of how it goes right there, and it can go in multiple ways, but I'm just showing you on how you can actually add more confluences with patterns to your trade to mark up your trade and see, oh, I think this is giving me this or this is giving me that. Now let's just do a quick recap on the candlesticks. Right, there are a lot of candlesticks, but you don't have to know all the whole candlesticks, to be honest. Just know the basic candlestick based on the instrument you chart. That is why it is good to analyze. That is why it's good to backtest, because different instruments you analyze has different chart pattern that works for it. But there are basic ones that I know of. Like for instance, this one is common, hammer is common, inverted hammer is common, engulfing is common, engulfing for bullish is common, Idoji is common as well. Story to time, that is basically what I use in confluence with um other maybe chart patterns, my Fibonacci levels, my zones, my support and resistance. So you don't have to know the old candlesticks, to be honest. Majority of the time, those few ones are just what I use to take my trade. Yeah, so you can do more research on candlesticks, but I'm just putting this out for like beginners that don't really know much. So I'm just going to go back to my chart and show you a few examples of this right here and the chart pattern. So let's go back to my analysis right there. Let me see. So first, let's see. Right now I'm seeing a descending channel like I showed you guys earlier on. You can see right around here, this is a descending channel right here. Sorry, an ascending channel right here. We can see right here there is this impulse, there is this correction of some sort right around here, and look at it, it's dropping to the downside. So this is a ascending pattern. So looking at this ascending pattern right here, and the ascending pattern is currently as a resistance zone. So these are the confluences you had up to mark up your chart to now realize that, okay, now I'm seeing a ascending pattern. And an ascending pattern, if you look at the pattern that I showed you guys on Google image, right? An ascending pattern is a reversal pattern. This is a reversal pattern. So it's showing us that we are going to continue, we are reversing. And the beautiful part of this is we are actually reversing around a resistance zone, which is this zone right here. So those are like confluences you see to say that, okay, I'm drawing my support and resistance, or I'm drawing my trend line. What next? Right? So you can't just use your support and resistance all the time. It works sometimes, but if you have more confluences, like I said previously, when you have more confluences, it gives you additional support to have higher probability of that trade going in your favor. So this is an example of the reversal pattern I showed you, which is an ascending pattern. And we can see that as soon as we got an ascending pattern around that zone, what happened? We started going down. So one, to show that all this works, you just have to train your eyes to see them. Now I can see a W pattern here as well. So if I come here now and put this right here, this is a W pattern. I can say, sorry, an M pattern. An impulse here, come here, give me something like this and push to the downside here. This is M pattern right here. So double top or M pattern. You just have to continue to analyze the charts to train your eyes to see it. So that is just the pattern I use, and I use Fib as well. I think I've done a video on Fib. You guys can go watch that. So now to show you that the pattern actually works and you can actually see the patterns in the real chart. Now I've seen a descending channel yet. So look at the descending channel here. An impulse, a correction of this sort, and what happened? Zoom to the upside. So this right here is a descending pattern. I know they call it something else again, but I can't remember. I'm trying to remember what they call it. Yeah, I can't remember. Maybe when I remember, I'll let you know. But a descending pattern is also called something else sometimes. Based on that is what I'm saying. Like, there are some things that are similar, but people call it in different ways. As long as it works for you, it works, right? So this is a descending pattern right here too, which is great, right? So that's what I'm telling you, like there are patterns that can work. This is a descending pattern, and I can also right here too, there is a W pattern right here. You can see one leg here, come here, and push up. This is a double bottom or a W pattern. So you can see that the pattern actually works. So it's just this pattern that I showed you in the book drawn, in the image drawn, and we can see it right here. We can see it right here. You just have to train your eyes to see it. Look at this right here. So this is right here. You're looking right here. This is an ascending pattern. Pattern right here. An impulse, an ascending pattern. What happened after that? We dropped. That is an ascending pattern. What is happening here too? This is an M pattern. So it works. It actually works. You just have to train your eyes to see it. This is one leg. Come here, and give me that. This is a W pattern. This is a W pattern. What works as well sometimes is the triple top or bottom. One top, second touch, touch, triple bottom, bottom. It works. So now that I've explained a little bit more about the chart pattern right here that I mostly use, now what next are we looking for? Let me explain a bit of the candlestick pattern, right? First of all, let's see. Remember when I was showing you guys the hammer right here. We can see this hammer right here. And when we saw the hammer, we saw this is an hammer right here. Just like the video I showed you guys. Then what happened after the hammer? We saw this candle closes above it. There's a possibility because of that we're going to continue to push to the upside. Just because the candlestick engulfed that hammer right here. Now, another candlestick I showed you was a doji, right? Doji candle. Doji candle is more like an indecisive candlestick pattern, meaning it's you can't work on that. You have to have more confluence to be able to know what that will go. It's indecisive. It's not going to the upside, it's not going to the downside. So what next after the indecisive candlesticks will determine what might happen. And we can see right where we saw this doji candle, we saw this bullish move closes above that. So practically this is like an engulfing candle right here. This candle is an engulfing candlestick right around this area right here. This is similar as well too. This candlestick engulfed this previous one. This is an engulfing candlestick right here. because this candlestick closes this one like 2 times or 3 times, right? The movement of this candlestick is like 2 or 3 times of this previous one. The movement of this candlestick is like 2 or 3 times of this one right here. So that's an engulfing candle because it's engulfed it. So as you can see, that majority of this thing actually work, and the more you simplify trades, the better, right? So let's look at this current price action right here. I'm seeing a double top here around the zone. So let's just say we want to trace the zone right here. I saw one be around this zone, a significant zone right here. That's a confluence. Let's look at the confluences to enter this trade right here. Let's just assume it hasn't done anything yet. One, we came from here, we pushed to the upside around that area right here. That's the first thing we did. Now we know this is a significant zone right around here because we can see based on this parallel price action that whenever we get to that price action zone, that whenever we get to that zone right there, there's a chances that it rejects. That is one confluence that we are saying. So one confluence we are saying is the zone confluences. Rejections around the resistance zone. So this is the resistance zone right here. Rejection around the resistance zone. That is the first confluence that we are seeing. Another confluence that I see again right around here is I see the M pattern around that zone. So let me put it together. So the first one is rejection of the zone. That's one confluence. That okay, since previously we've always rejecting around that zone, there's a possibility of a rejection, but that is not enough reason why to just take trade there. Another confluence is I'm seeing the M pattern right here, and this is my M pattern right here. We can see it comes here, right here, right here. That is an M pattern right here. Now that's another confluence that okay, now I'm seeing a reversal pattern. So remember I said the M pattern is a reversal pattern, meaning that we're currently pushing to the upside. Instead of continuing to push to the upside, I saw an M pattern in a beautiful zone. That is a reversal. Now there's a possibility that we are now at the uptrend, but because of that confluence that I'm seeing, there's a possibility that we are reversing. So that's another confluence that I see, right? Another third confluence that I can see is there is a break of structure. This right here is a break of structure right here. Because you know that if you're pushing to the upside, we need for an uptrend, we need this structure right here. This structure determine an uptrend, right? We are seeing a higher low, a higher high, a higher low, higher low, a higher high, higher low, higher high, higher low. So now that we see a break of structure, that is another confluence that it's reversing from a higher low, higher high to a lower low, a lower high. We can see that this candlestick right here, broke this previous low right here. Previous low. That is the previous higher low based on this uptrend because we are going uptrend here. So that is the previous higher low, right? Now we saw this break of trend line right here. That is another significant confluence that we might continue to push to the upside. So now just based on this trade, I have 3 confluences. And like I said, the more confluence you have, the higher the probability that what you think might happen is going to push to the downside. Now, what is my next confluence that I see around this trade right now? Number 4 that I can look for right here, right? Is that when we broke the structure right here, be pushed to the upside, and it gave me a lower low, a lower low, a lower low. So giving me breaking the structure, and after breaking the structure, it's created a lower low, meaning that it did not go above the previous low, the previous high. It went below the previous high. So that is a pattern of a downtrend. So a downtrend is giving me something like this. We can see that is a downtrend right here. A lower high, lower low, lower high, lower low, lower low, lower high. So we can see, so those are like confluences that makes it like great, that we are going to continue to trade. So now you can see this pattern right here giving me lower low. A lower low, a lower low is a downtrend. That is how downtrend reaction react. That's a confluence that we might start pushing to the downside. So those are how you trade the market, for you to know that, oh, this is how you just don't do support and resistance and market. Do support and resistance, right? Use chart pattern, use use candlestick patterns. And let me just do it. It doesn't have to actually be a zone. It can be a trend line. So trend line also have a support and resistance, right? Let me go through that too, because some people just think zone is just support and resistance. No, trend line has that too. So let's see right here. Remember I said to touch, make a trend line. So as long as it's to touch, is a trend line. So for a support and resistance on a trend line, right? This is the resistance here. And this is the support here. Remember I said support is the floor and resistance is the ceiling. So it's just the same thing as the zone. The zone meaning the rectangle boxes, right? So if you have two boxes right here, just know the upper one is resistance and the lower one is the support. That is the easy way to remember for beginners that don't really know much about support and resistance. And always remember that your resistance can become support, your support can become resistance when it breaks. Let me explain that before I forget. So we can see around, this is a perfect example to explain that. We can see that when I draw the zone, right, when you draw a zone right here, right, this was a resistance. Because when we were pushing to the upside, right, it said it's not going to, you can see there was a reaction that shows that when we get there, these weak reactions, and the push to the downside, continue to push to the upside. Push to the downside, came up to reject as well. So now that we broke the zone right here, with this engulfing candle here, then we came back down to retest that zone multiple times and it wasn't breaking down, and we pushed to the upside. Now, based on this one right here, it has changed from being a resistance zone to a support zone. I hope that is not confusing though, because I know when I first started, that was a little bit trickish and that was confusing for me. I hope it's not. Let me do another example again, just to make sure you guys understand it. So you can see around, let me see. Let's look at the zone right here. Let's look at here. Let me see if I can go to a smaller time frame just to see. I want to explain another zone. I just want to explain how you can see that there's sometimes that a support and a resistance can shift, and your previous supports can be your okay. Now, yeah, there's a good example. You can see this current price market right here. You can see a rejection here, a rejection here, a rejection here. Let me just zoom in a little bit to see. We can see it rejects here, rejects here. I'm seeing a rejection around this zone here too. Let's zoom in a little bit. Rejection here, rejection here. Okay, that is a solid zone right there. So that is a solid zone right around that area, we can see, because of that multiple rejections we've been seeing. So when we had this zone right here, this is called a support right around here for this resistance, right? But now we can see that we started pushing to the downside, we started pushing to the downside. When we got to the downside, right, this candlestick right here closes below the support zone. Now it's now support zone. Now it's a resistance zone. And that is because we can see that this is a solidified support zone before. Now that it broke this zone right here, if it continues to push up here and you're seeing rejections around that zone and it's not trying to break the zone and continue to push to the downside, it has now changed based on this current price action. It has now changed from a support zone to a resistance zone. I hope that is not confusing, guys. I really hope so. But that is just simple way to mark up your chart and analyze, right? That's why I say, like, don't just use support and resistance. It works, but add more confluences for you to be able to mark up your charts, right, based on chart pattern. So let me just do a quick recap. We have support and resistance, and support and resistance can be in form of zone, which is the rectangle box, or a trend line, which can also be the diagonal lines, right? That's one way to draw your zones. So support and resistance, trend lines. We can use chart pattern, and the most of the time the chart pattern I use are the double top, which is the M. B, we have the double bottom, which is the W. Another one that is current is the ascending pattern, which is this pattern. You come here, push up a little bit, then continue to push the downside. D, we have a descending pattern, which is as it's down here, come here, descending pattern, and push to the upside. That's two. Let's see, I have more to write, so let's see. So number 3 will be the candlestick pattern. So the candlestick pattern will be doji, engulfing. That is what I use most of the time, and probably an armor. Like I said, there are multiple candlesticks. Just look for the candlestick that work for that particular instrument that you're trading. That is what I use for confluences most of the time. So basically that is how you mark up your chart for beginner. And yes, you can basically just trade off of this, but like I said, just start from something basic, and as time goes on you can add to the simplicity, but still make it as simple as you can. I still use support and resistance, zone, diagonal, but I had Fibonacci to mine. You can watch my previous analysis on how to draw Fibonacci. I'm going to do a retracement and extension of Fibonacci on how to trade that, because I trade Fibonacci a little bit different than how some people trade Fibonacci. Fibonacci is like my 19, it's like my strategy. 99% of how I trade is Fib, and 1% is the zone, the trend line, but that is how I trade it, because I use my Fibonacci as like an entry with confluence with the market structure. I use that as my stop loss in confluence with the price action. I use it as my take profit as well. So I use my Fib a little bit way. I know some people use their Fib just for entry, seeing the retracement level and taking their trade around that area. But I use it a little bit more extensive than how some people use it. So that is just how you can chat up your how you can mark up your chats in a simple way and friendly way. Hope I was able to help you one or two ways, especially for beginners that don't really know much on how to start. You can basically start on this, and as time goes on, the more you learn, the more you backtest, you can add more things to it that suits you well. You can add, you can remove. Some people don't do support and resistance anymore because they think it's too simple or it doesn't work. I believe it still works, because my belief is every strategy works. You just have to find the edge and you just have to be consistent on it, and everything works, to be honest. So that is my quick video on how to mark up a chart, guys. Hope you find this helpful, insightful, and knowledgeable, and hope you um gain one or two things from this. And if you do, please don't forget to share, subscribe, comment, like, and I will definitely see you in my next analysis, guys. Thank you for watching, and bye.